What's going on, traders? It is Sunday, January 25th, 3:29 p.m. I'm Antoine Farrar, and welcome to Digital Goatz Academy. And welcome to our weekly review where we pretty much hash out anything that transpired in the market from the previous week, which I think I have a lot to discuss today because I'm gonna go through a couple currency pairs. I was gonna narrow it down to like a few, only doing indices. But since, actually doing a little back testing and looking at what the market did last week, I definitely need to be talking about a couple more pairs, which being the first is cryptocurrency, well, Bitcoin. And if you're tuning into this video, do me a solid and make sure you hit that subscribe button. It should be either at the top or the bottom, depending on what device that you're viewing on today, right? But let's go ahead and get into it. Bitcoin, right? So our projections for Bitcoin, I think, are playing out now based off of what happened just this previous week or these past 2 weeks alone, right? So let's go ahead and look at what happened this previous week, which would be Sunday. Sunday, what was that? January 18th. So where are we at? Yeah, as you can see, the market just pretty much fell off of that resistance point. So once we hit resistance up here, which remember we were discussing this area because we were kind of on the fence on how price was moving in this general area. It was giving us conflicting arguments. But again, as far as we go, I mean, as long as we stay with the trend, that should be our friend, right? I don't want to sound cheesy, but as long as we stay with the trend, you should be in the right direction. So let's just kind of, what I wanted to do is backtrack from what we were projecting to happen with Bitcoin and where we are currently. I'm probably going to take like 2 to 3 minutes to do this, but we had projected in my community that Bitcoin was going to reach a high of like either 125K, well, yeah, 125K, which it reached a high of 126K, 126,200, right? So 126,200, right? So the market started selling off from there, and that was pretty much our first indicator that this might be a bear cycle, right? Not necessarily in the sense that we're selling off to like erase any of the gains that we have, but we do have to correct ourselves. Every market, doesn't matter what it is, it has to do some type of correction. So that's in the form of a pullback, that's in the form of consolidation. The list goes on. Well, I guess the list doesn't go on, but you understand what I'm saying, right? So we have to be in preparation for some type of pullback. Don't get fooled like a lot of us did starting off in our careers as traders by saying, oh man, this market looks like it's about to Hail Mary. There's no way it's coming back here. Again, with cryptocurrency, the design is still new. So really the only thing you can go off of is the technicals versus relying on the fundamentals. To me, the fundamentals can get a lot trickier when it comes to cryptocurrency in comparison to like the stock market. The stock market, a lot of investors rely heavily on the fundamentals and then use the technicals to find a position. For us, I think we need to rely heavily on the technicals because it's telling the story. You know what I'm saying? We have brought up before the stock market, I mean, the Wall Street cheat sheet, which to be honest, Bitcoin specifically is playing out exactly like that. Look it up on your own, but Google it on your own time. Look up the Wall Street cheat sheet and you'll be able to see, well, I can't say that. The Wall Street cheat sheet, and you'll be able to outline like exactly the phases that the market is doing. It's kind of like a book, but if you match it up to like what the visuals look like in comparison to like Bitcoin, I promise you, you're going to see spot on the mark, right? With what you see on the Wall Street cheat sheet. But so what we were waiting for was that this is what I told my community is that if price breaks where I have identified, well, I have annotated this low. So you see this line where it says low at, maybe you could see it depending on what device you're looking on, but it says low right here. We were waiting for price to break that area to validate. I mean, at this point, I'm more of an aggressive trader, so at this point, I had already believed that we were bearish, but once we hit this area, which was a previous high, because again, that's what I have annotated. You see the blue, that was a previous level of support. I was waiting to see if price was going to respect that as support or blow through it. It blew through it and then started playing around. But guess what it did over this weekend? Yeah, this is 2 days. Guess what it did over this weekend? Over Friday, Saturday, and now today, Sunday. We basically tested one, an area consolidation, a previous level of support, and then we created a bearish, what is this called? A shooting star? I think this is a shooting star. But anyway, it's a bearish pattern, right? Or you could say a doji. So this was your confusion or your inconsistency. And then the market shot the fuck down today. We're talking about today. I don't need for the market to break this low to tell me that it's coming down lower than this. This is the move. This is the move that we were waiting on. So for the crypto bros, I think, you might want to kind of pump your brakes on investing in cryptocurrency, depending on if your position is low or not. But for us, we're going to wait and see how low this market goes. Again, if you've been following our channel, you know that we've discussed this before and we were kind of, bouncing around with ideas or where we thought the market was going to end up landing. But I do think that as far as our first point of contact, I do think that we're going to hit that 65K. I think we're going to blow through 74K, hit that 65K, and then we might start seeing bulls pop in. But I'll be honest, traders, I will be honest. I can see this market coming all the way back down to 40,000. I said this in like, what year is this? 2023, 2024, got my head bust open because the market rose, which made sense. It definitely made all the sense in the world, right? So it rose up high. And again, this is our correction now. So I believe that we're heading into correction territory. Well, we are in correction territory where the market is going to try to test a lot of these areas lower. So that means that's a good opportunity for anybody if we get price to push down lower. Well, I'm expecting price to push down lower, but that means anybody that was like a late investor, this might be your call. You know what I'm saying? This might be your call, and we'll probably see these numbers being lower by like the end of the year. So to me, I'm thinking that we're in a bear market for this entire year or maybe up until Q2, I mean Q3, Q4, right? And we'll obviously keep paying attention until the market shows us a lot more data. But to me, this was the sign I needed for us to say that, yes, this is a bear market. I mean, once we bounced off this resistance up here, if you can see that, once we rejected this resistance in the market, pretty much broke this low. Like I was already convinced, but now that we have a break of structure, which we identified, oh yeah, I think that this market is coming down. Bitcoin currently is at 86,162. I just watched it go from 168 to 162 and back at 164. But again, I don't want to get, overly excited, but this is exactly what we were expecting because again, a lot of investors or a lot of people who were skeptical about cryptocurrency, they didn't have the opportunity to invest, or they thought they missed a move, or maybe they jumped in late when the market was actually correcting itself. Then you blew all your money, or maybe technically you can't blow all your money unless you close, but you closed out your portfolio because it just looked ugly. And look at what the market is at today, right? You know what I'm saying? So if you were one of those traders or one of those investors, then you probably get a second opportunity by the end of this year. But I don't think that we'll get that opportunity ever again after that. I know I kind of said that before, but I do believe that. I don't think that like at this point, because at what point does it matter for you? Or what point does the investment matter to you? You know what I'm saying? Like I don't want to go, I don't want to go too off topic, but as far as like you investing, you want to do it to where it matters to you, right? In your lifetime, you know what I'm saying? When prices are low, not when prices are high. We know that overall cryptocurrency is probably going to be something that's profitable, but we don't want to invest when the market is like extremely high and we don't really get the best bang for our buck, right? But that's what I'm looking at for Bitcoin. I don't want to confuse this with our market forecast. This is us just doing a weekly review. But because I just saw that move take place today, I definitely have to push that out to the community. So I definitely think that bears are in the market and possibly, a pullback to this area, and then the market should continue falling off the radar from there. Now, our bread and butter, what we mainly focus on this channel, we do cover all things foreign exchange, right? But we mainly focus on indices. So what we're going to be discussing like right now is US 30 before I get into S&P and two other pairs, two other regular Forex pairs that we were looking at throughout this week that we definitely made profit off of, but it wasn't the exact move that we were looking. But I'll definitely go into detail, maybe do something Monday where I emphasize like closing profit or not always aiming for the longest target, you know what I'm saying? But anyway, US 30, right? Now, US 30 kind of gave me, a headache these past couple of weeks because I was able to see like this sell move, but we weren't able to catch it until like we saw it pretty much sell off here. Like I was somewhere up here, but the market, it kept playing around in this general area. So we have this consolidation zone that the market was definitely testing, and we finally rejected that for the third, really the fourth time. One, two, three, four, five, fifth time. You know what I'm saying? So for the fifth time, if you look at it, well, this is really where the consolidation started, but I'm counting the resistance. So this overall area was resistance, and the market refused to break it. Not to mention, again, let's make it simple, right? If we're looking at it based off of structure, this is a 4 hour time frame. If we're looking at it based off of structure, here's a higher high, lower high, lower high. You see? What is that? What is that starting? The possibility of a downtrend sequence, right? Well, let's not get too crazy into that. Let's just focus on what the market did last week. Now, like I said, a lot of confusing arguments here. Where we at? Okay, so yeah, Sunday. Sunday, yeah, 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 I remember. Okay, okay. Yeah, Sunday's where the market gap down. We had this major gap. So yes, I was selling from here and I was able to make profit off of that. And then what was it the day that Wednesday, President Trump was at the World Economic Forum. And once he started talking and saying his things, that rallied the market extremely bullish. You know what I'm saying? It got extremely bullish as the market rallied all the way up to this consolidation zone, right? And then this was Friday. So pretty much from Wednesday to Friday, the market, well, Friday morning, the market was bullish. And then at this point on Friday, which was Man, 2 o'clock. 2 o'clock, the market started falling off. We filled this gap 100%. To me, that's the gap covered. That's the gap covered in order for us to continue the downtrend. Now, again, we're still overall, like overall bullish on indices. But again, same thing what I was saying with Bitcoin is that we do need some type of correction. And for how aggressive the market was bullish last year, oh yeah, we definitely need some type of fucking correction to make sense. You know what I'm saying? Again, the biggest thing is not trying to anticipate the pullback, but also just kind of keep it in your mind that a pullback needs to happen. So I'll keep buying until the pullback happens. But now we're in the pullback phase, so now we need to change our directional bias to pretty much sells. And as you can see, the market, just looking at this structure, like that was a clear sign right there. So I'm liking what I'm seeing based off of what we've been discussing. I know we've kind of been like not on point with our entries like we were last year, but it is the beginning of the year. We're basically trying to find ourselves the best position to be in where, some of you with a little bit more capital, you possibly could hold this trade all the way up until I want to say May, possibly anywhere from April to May. That's where we saw like a bounce up last year. So, I'm expecting around the same area or if we're slowly pushing down, if the market seems like it's struggling to push down, I'm thinking that we may sell off this entire year up until like October. So just kind of keep that in mind that that could actually happen. You know what I'm saying? And adjust fire accordingly. You know what I'm saying? Like, don't try to over leverage, don't try to shoot for the moon, but just definitely be wary and pay attention. Don't be scared, but just be assertive and pay attention to what the market is showing you, right? But based off the technicals, we're definitely looking the market to keep selling off unless it does something crazy today, like gap up slightly. But I mean, they could do a slight gap. But again, I don't want to throw my predictions until we actually have the market open today. But this is basically what the market did. It bought up, well, it sold off. This was the gap. So it sold off, bought up again, respected this consolidation, which again, you could see this as resistance. And then the market started falling off from there. So I am definitely looking at US 30 to try to push down some more today, and let's see where it lands. I'm hoping we get it back to like 45K. 45K is where I was initially looking, and then I'm gonna decide like once we get more data what the market is like overall look showing us. That 50K joint, I don't believe that's happening unless literally this range was like a fake out to the downside and then the market is about to shoot up. So remember, Trump did say that we'll get it towards 50K, but I think that was like investors. So I think based off of this move, that was investors saying like, okay, well, Trump said we'll get US 30 at 50K. And the market is like, "Pfft, Trump doesn't run this shit. He got a lot of money, but he don't run this shit. You know what I'm saying? I'll let y'all in for what it is and then take it on the back end. You know what I'm saying? So don't be surprised if you see the market go lower than this initial area over here, which is 48,300, 48,300. It goes below that. That's guaranteed, like pushing down further. You know what I'm saying? It's going to blow through this consolidation. And our next stopping point, our next bus stop would be at this gap, which, like I said, it would be around the 45K um, price area. I mean, price zone. So just look forward to that. You know what I'm saying? Just definitely like pay attention, look forward to that, and don't try to like over anticipate. Just follow the trend. You know what I'm saying? But again, I'm a more aggressive trader, so for me, I'm already in this shit. You know what I mean? Like I'm not waiting. I get enough confirmations on the smaller time frame to discern like what the market is telling me or not, right? And especially since we broke this support, I know that, the market was still respecting this as support, but like I said, I think that this was just a correction move in order to cover the gap, which I'm glad we did this now instead of having to worry about it like throughout the year. So that was a smart move on the market, I think, because had the market kept selling off with this gap, we'd have always had to worry this entire year until it covered this gap like 100% or partially that the market was going to try to test this gap up here. Remember, we identify gaps through a purple zone. So whether it's a transparent or whether it's a hollow, like it's always going to be like a purple zone that identifies a gap. Consolidation is either tan or orange. I don't know what color that is, tan or orange. Um, but yeah, that's it for US 30. So again, if we're looking at that for US 30, what should expect for the other indices? We should be expecting the same thing, right? So let's go ahead and look at what happened, basically the same thing, like what happened this previous week. So again, Sunday, I've already annotated Sunday. Sunday created this gap, sold all the way down. And again, this is the same point at which Trump was speaking, right? Got bullish here, tested the market right here, got bullish again. Now we've consolidated, which even though this happened on a Friday, I don't believe that we should have consolidated if the market was going to continue pushing up. I think that it should have blew through there. Now, the one thing that we did mention is that we normally see that S&P doesn't fill the gap 100% like US 30 does or like NASDAQ does. And that's not always the case. Sometimes it does it, but as you can see, there's still information missing right here. Don't be distracted by that. Close enough is still good enough. You know what I'm saying? Because what ends up happening is that you start paying attention saying that, oh, well, it didn't cover that 100%, and you're looking for it to still buy back up. You're gonna get punched in the mouth while the market is like selling off, and you're like, well, no, it's probably correcting to buy back up, and then we're all the way back down to like 6,700. You see what I'm saying? So I would say ignore that, even though it didn't cover this gap 100%. Like you see that from there, from this wick to here, there's like it's not filled in like US 30 is. So you see how US 30 completely filled this gap? S&P hasn't done the same thing, even with the NASDAQ. Let's touch on the NASDAQ. Now, I don't trade the NASDAQ, but again, it's part of the big three, so I do keep my eyes on it because it helps me identify like on the investing side when it comes to tech stocks, you know what I'm saying? So I still look at the NASDAQ, but I don't trade it. I commend y'all for being able to trade the NASDAQ, yo. I think it's too wild if you ask me. But anyway, you can see that again. Same thing. The way this gap is displayed is a little bit different. It's not hollow. It's a little solid. But again, 100%. You see how I moved 100%? Now that we've seen US 30 and and the NASDAQ cover their gap 100%, I'm gonna have to believe that S&P is pretty much respected this move right here. And even though it didn't cover it 100%, that was good enough. Remember, well, I guess it's good enough when you see that wick. It's like wick to wick there. I guess that kind of covers it. I mean, I don't like that when we're looking at it on a higher time frame. I like to see a candle covering it, not wicks. You know what I'm saying? But again, we're basing it off of how the other indices are reacting, or how the other indices are responding. So the fact that it didn't cover this 100%, to me, it still covered the gap. You know what I'm saying? It just didn't fill it like we saw US 30 and the NASDAQ do. But again, same thing. Like we still been bearish, you know what I'm saying? The market has not come back up. The last time we had price come back up to this level was when it tested our consolidation that we identified. What was this? January. Second week of January, you know what I'm saying? So the second week of January is where we identified this. So the following week is where this market consolidated, pushed down, created this bear movement. And again, perfect. Like perfect what we want to see when it comes to structure and when it comes to technicals, right? Turn it to a line chart. Make it make sense to you. This is still data, right? This is still information. You can see it on the line chart, but on the candlestick chart, you can't see it, right? So this is still good data to use, right? If I'm just being, extra, let's do it like this. Now this is Hakanashi. The only reason I'm doing it like this is to actually measure this candle because it's on the candlestick. Obviously, you see that the information is not there. So what I wanted to see is that what percentage of the Fibonacci tool that S&P tested based off of the candle that it's currently at. This was the candle that it's at, exactly where the gap is at. So you can see that it rejected 786 of this candle right here. You might be like, I can't see that. Let's zoom in. Zoom in. It says zoom in. Let's zoom in. So 100%, right? Top to bottom of this candle, including wick. As you can see, we brought it all the way out, 786. The market has rejected it. It's rejected it with wicks. And then when you look at the line chart where it's closed at, it closed at 618. You see what I'm saying? So unless the market just gaps up like ridiculously high, which I don't think that's happening, we have to believe that this is a bear market right now, just based off of the sequence of events that's been transpiring these past couple of weeks, which is good news for us because this is what we were waiting for and this is what we were looking for the market to do instead of like continue pushing up. I did believe at one point that we were going to like be on a major bull run, but once we didn't hit that by the end of the year, I knew that the market was probably going to try to reverse from there. So as you can see, S&P got close to 7,000. Um, very short. Well, I wouldn't say very short, but yeah, it got close to 7K and the market rejected that. Again, good signs to us, but that doesn't mean that we won't see that by the end of the year. The thing is that how far would the market go down before it actually pushes back up? You know what I'm saying? So we are expecting for S&P to drop pretty far as well. I could see this isn't my original charts, but if we're just keeping it again simple. Previous high right there, major previous high based off the weekly. I would definitely like to see the market at least come back and test that area. Here's an imbalance candle right here. So that would be the first point of contact once we started seeing the market starting to push down lower that we would identify for the market to start buying up and then see how low the market's going to go. So that's funny that I said that. Look at this. This is consolidation right here. I love doing this because we start seeing stuff that we just didn't pay attention to before. Mm, hope everyone is being warm out there. Well, really us on the East Coast. I talked to one of my people in Texas and they said they didn't get hardly anything. It's just cold as fuck out there. So I hope y'all make sure y'all being warm today. with this ice storm that's trying to traverse the whole United States. So this is consolidation. This would be exactly where we would be targeted. Remember, indices love to be attracted to consolidation, right? So this would be the first area, well, once we get more confirmation, but if the market is like selling off past this point, this would be the first area that we would look that the market is gonna push back down unless it decides to do this next year, which I don't think that's the case. But again, we'll see. There's been a lot of like I wouldn't say negative news, but a lot of news that could drive the market down. I mean, last year, in December, we had Warren Buffett retire from his company. You know what I'm saying? So that could play a factor into it. Trump has been threatening the world with tariffs again. You know what I'm saying? They just reached an agreement, but again, all that bullish momentum that we had last year was which was extremely bullish. It has to give a little back. You know what I'm saying? Whether it's like 38%, 50%. So look where this lines up 50% at. I could see 382. That would be the high point. Now, if it hits 382 and rejects this, then definitely this market is saying, yo, I'm going higher than what you even expected. And we're looking forward to that. But that's what pretty much happened last week for S&P. So our bias is still the same as far as like looking for sales. Unless it breaks this high, I'm still going to be a seller this year until it starts showing me better buy positions. And if you look at the stock market has definitely been affected by this. So I don't try to compare the stock market all the time to foreign exchange, but they have a lot of similarities that you can gain like value from on each spectrum. You know what I'm saying? So for me, like looking at the stock or looking at that stocks are down, especially stocks that I invested in last year that we were up, that's like a tall tale sign that the market might be going on a bear run just momentarily until we find our support area that we need to in order to buy back up, right? So let's move into the last two currency pairs so we can go ahead and close down shop. Now, GBP USD was one of the currency pairs that we were trading last week. So last week, the market. Oh, okay, so this was the gap. This was the gap. I remember now. So again, my gaps for me, my gaps are identified either on by circles, purple circles, or purple squares. That's the easiest way I can simplify that, right? So anyway, we had a sell entry, and I think this was our original buy entry at one point too. No, that was USD JPY. Anyway, this was our original sell entry. And again, this is what the market did over last weekend. So it did gap, but you had to have been like next to your phone or on the charts like as soon as the market like opened up for you to close this out because as soon as it gapped down like that day the market started getting bullish. And then again, we sold off from this area, put us back down at our sell entry, and then Trump started fucking talking and it shot the market up, right? Now, I think this is like basically the UK and the ECB like basically retaliating against Trump. I don't know how they did this, but we had initially thought that the market was buying up. But at this point, I mean, we did think that it was buying up until we hit this area, which it did make the market seem like it was selling off. And then it shot up thanks to Trump, you know what I'm saying? But again, I think this is in response to Trump talking about tariffs and stuff, and they just now reached an agreement. So like UK, United Kingdom, and European countries were like, "Yo, man, we're not bound down to you like we did your predecessors, or we're not bound down to you just because you're doing a lot of talking. We're gonna raise our equities, you know what I'm saying? And that's exactly what they did. And you could see that happening with GBP USD and Euro USD. So for me, what I'm thinking is that we're in a bull run now for both of these currencies. I didn't want to discuss the Euro USD. I just wanted to show you in conjunction with GBP USD because they're in the same region. So whatever GBP is doing, you can expect the euros probably following, if not doing that in advance. You see what I'm saying? And you can see that they both went on a bull run, especially GBP USD went on a dumb bull run. Obviously, thanks to Trump, it already happened from the gap. You know what I'm saying? A lot of this stuff is priced in. So even though I am saying like, oh man, this stuff happened thanks to Trump, this stuff was priced in. We were just in the wrong direction. This market was on a bull run already. But were we able to take advantage of some opportunities? Yeah, we almost reached our target too. We were just, even though we waited for this shit, we were just 28 pips off, 27 pips off from our target. So again, I emphasize making sure that you're setting alerts and paying attention when the market opens on Sunday if you held a trade over on the weekend to be able to close it out, right? So that's what the market did and shot up. And like I said, I think that we're on a bull run. What we would need to happen, I mean, we would need like some type of correction, but the way that the bull run looks, it looks like it's so aggressive that the correction could happen like another month from now. You know what I'm saying? That's kind of how these things run when they're influenced by like political figures or like financial people that deal with finances, things like that. So with that World Economic Forum that happened and all those agreements that were being reached, that definitely added some bullish momentum to the British pound. So I'll be looking at the British pound to remain bullish until we start seeing signs of like bears in the market. But it just looks like it's following that path that we had already outlined, Joe. We had already, expected this and the market kind of manipulated us a little bit. But yeah, we had already expected this, so that's definitely a pattern right there. Wow. One, two, three. The three candles. This guarantees that the market is bullish. We do need some type of pullback, so I don't know when that's going to take place. But I'm not even like a true GBP USD trader like I used to be. So as far as the direction, yeah, the direction is bullish for like up until quarter three. You know what I'm saying? Like, so all you would have to do is find your entry wherever price broke out at, look for a price to return back to that, possibly to our stop. But again, how bullish this market is, I don't know when we'll receive that. Yeah, especially with the way this is. This is a candle. I mean, this is a Hakanashi and the way that this market. So the next candle that's going to open up is guaranteed to be bullish, but it'll probably open up a little bit lower. So if you were high up here, the market will probably open up a little bit lower. But this is definitely a bull market. This is definitely a bull trend when you're looking at Hakanashi's pattern. This is the only confusion joint. So if the next candle that opens up and this weekly candle is like has a flat bottom, oh yeah, man, the market is to the moon. I'm surprised because like, the euro and the British pound have been doing so bad like the past couple of years that I mean, I guess it makes sense at this point. It makes sense that the market is like they're trying to get themselves out of a rut. And you see, this is the lowest they've been. 2022, as far as this data shows us, this is the lowest that they've been um pretty much since they opened up. I would have to look back at like other brokers, but based off this broker, which is Black Bull Markets, 2022 is the lowest we've been. So we're low. We're low overall. So we have to respect that the market is possibly buying up and buying up to a higher position than what, yeah, this might be a dumb bull market for the euro and the British pound. This might be a dumb bull market. Once we get here, we'll have probably some, resistance and stuff, but we got to get here first. But that's basically what happened last week with the British pound, United States dollar. And for our last one, let's look at the United States dollar against the Japanese yen. Now, again, everything's based off of what happened last Sunday. Last Sunday, where is it? 18. Yeah, I remember us playing around in the zone. This is why I be hating Forex Bear sometimes, yo. Like I remember us playing around in this zone, and it did give us because we had a buy. Yeah, we had buy areas up here, you know what I'm saying? So we were able to make some profit. So we bought somewhere like over here. We were able to make some profit, but it didn't hit our targets. I remember I had a target up here, and then our last target was 160. As you said, the market said, fuck you. But from our buy entry, we were able to take advantage of about 122 pips, anywhere from like 80 to 120 pips. I don't remember exactly where our entry was. Yeah, 158. I remember 158 around that area was our entry. So yeah, it's almost basically 100 pips. We were able to capitalize on 100 pips before the market said, gotcha, motherfucker, right? This was our last buy entry, but I had mentioned this before that once a pattern is done, once the market like fills a pattern or meets the pattern on the opposite side, that pattern is no longer valid. So we were over here believing that it was a bullish flag pattern. It was. The market dropped slightly and then shot up again. So it knew that everybody saw that pattern right there and it drew some type of manipulation, which really this is just pure market structure. But again, if you're expecting the market to continue and it drops down, of course, you could be confused and believing that, oh man, the direction has reversed. But based off this move, there should be no confusion no more. This is the move. We're at resistance. You know what I'm saying? We're currently at resistance. The market sold off here. It didn't want to go any higher. So yes, the dollar is officially bearish right now, which is crazy to me because oil is bullish, you know what I'm saying? Especially US oil. So it looks like this specific um pattern we're gonna eradicate, you know what I'm saying? So as far as this pattern, it's not gonna be valid anymore. So I'm looking at this market to actually push down a lot lower than probably what a lot of other traders are expecting. Because again, this is why I emphasize leaving some type of annotation on your chart to say, hey, yo, there's something here that maybe you missed last year or the year before. Again, this happened all last year. You know what I'm saying? This bull run happened all last year for USD JPY. I know we're doing a weekly review and we go from the previous week, but look at the previous weeks. Dumb bull run without no form of correction. This was the last area where I was like, okay, price is creating resistance and it actually created support, pushed the market up. And then this is where our true resistance is at currently. So we have two areas where the market, which I was expecting. I just didn't think it was going to go higher, but we should always factor that in. If it's going to buy up, it's going to go lower. If it's going to sell off, it's going to go higher, and that's what it did. It went higher than this original area over here, but this is still resistance. So again, tracing it back, just take a line, trace it back. I guess that's not going to work, but they meet. You know what I'm saying? They're not, parallel to each other, but they meet. You know what I'm saying? At least perpendicular, right? But anyway, I'm looking at UJ to start to sell off just based off of this reaction. Obviously, we know with the momentum it has, there should be some type of small correction. But when it comes to like, how aggressive the market is pushing to the downside, I do not believe that we'll get like a major correction. This is a Forex pair, so it definitely could do that, especially with this being consolidation. But I don't think that we'll get a major correction. If anything, we might get price to test this candle right here, a percentage, if not 100% of that, and then continue selling off from there. So I don't think no major pullback, but again, follow the momentum, turn it to a Hakanashi candle. And as you can see, this is literally the start of our bearish momentum. Of course, you would want it to be up here, you know what I'm saying? But this is truly the start. Flat top, strong candle. You know what I'm saying? When you see flat top and weak candles, that's kind of the market being indecisive. But when you see strong candles, it's telling you what it fucking wants to do. Make no mistake about that. And especially when it comes to a pretty moderate time frame. And this is the Hakanashi, which if you've been following our channel, you know Hakanashi measures momentum. But traders, we're heading into about an hour before at least Forex pairs open, 2 hours before the regular market opens. So I have to get ready for my group there. So I'll catch everybody on our next video with Digital Goats Academy. Just be careful, you know what I'm saying? Make sure you pay attention to like, any conversation that Trump may be having that could definitely sway the difference or the direction in the market. But I'm Antoine Farrar. I hope everybody has a successful trading week this week. And I hope y'all make a lot of money. I will catch y'all in the next video with Digital Goats Academy. I'm signing off. Peace.